Hello and welcome to a new video. Today we will discuss Meta. Meta Platforms has demonstrated a remarkable resurgence in its stock performance and investor confidence, largely due to its core advertising business performing exceptionally well and its aggressive, yet calculated, investments in artificial intelligence. While the metaverse vision remains a long-term aspiration, Meta's immediate future is firmly anchored in leveraging AI to enhance its existing social media platforms and drive advertising revenue. Recent financial performance and stock momentum. Meta's financial results for Q1 2025 painted a strong picture of its operational efficiency and robust advertising machine. The company reported revenue of $42.31 billion, a significant 16% increase year-over-year, and earnings per share, EPS, of $6.43, up 37% year-over-year. These figures comfortably surpassed analyst expectations, leading to an uptick in Meta's stock price. The family of apps, FOA, segment, encompassing Facebook, Instagram, WhatsApp, and Messenger, continues to be the primary revenue driver, contributing $41.90 billion in Q1 2025, a 16.3% increase from the prior year. This growth was fueled by a 6% rise in family daily active people, DAP, to 3.43 billion, coupled with a 5% increase in ad impressions and a notable 10% increase in the average price per ad. This indicates Meta's success in both user engagement and monetization strategies, particularly with AI-driven ad recommendations improving conversion rates. Despite this strong performance, Meta's Reality Labs (RL) division, which is responsible for its metaverse initiatives, continues to be a drag on profitability. In Q1 2025, Reality Labs generated $412 million in revenue, a slight decrease of 6.4% year-over-year, and posted an operating loss of $4.21 billion. While these losses are substantial, the robust profitability of the FOA segment allows Meta to continue funding its long-term metaverse ambitions. The company's commitment to returning capital to shareholders is also noteworthy. In Q1 2025, Meta spent $13.4 billion on share buybacks and distributed $1.30 per share in dividends. This capital return program, initiated recently, further signals financial strength and a positive outlook to investors. Strategic pillars and future outlook. Meta's future outlook is shaped by three key strategic pillars: AI, integration, the continued growth and monetization of its family of apps, and the long-term, albeit costly, bet on the metaverse. AI, as the core business driver. Mark Zuckerberg has explicitly stated that AI is not just a feature but the future of Meta's business, especially in targeted digital advertising. The company is aggressively investing in AI capabilities, with projected capital expenditures for 2025 raised to between $64 billion and $72 billion, largely allocated to AI, project development and infrastructure. Meta is leveraging AI to enhance ad targeting and performance. AI algorithms are making ad targeting more precise and efficient, leading to higher conversion rates for advertisers. Nearly a third of advertisers on Meta platforms are already using AI for content creation. Boost user engagement. AI-driven feed and video recommendations have significantly increased time spent on Facebook, 7%, and Instagram, 6%, demonstrating the positive impact of AI on user experience. Develop new AI products. The standalone Meta AI app, leveraging the latest Llama 4 large language model, positions Meta as a direct competitor to other generative AI services. Revolutionize business messaging. AI is being integrated into business messaging on WhatsApp and Messenger, offering new monetization opportunities in these growing channels. Sustained growth in family of apps. The FOA segment remains Meta's cash cow, and the company is focused on maximizing its potential. Video content and Reels. User engagement with video content, particularly Instagram Reels, continues to grow, attracting advertising budgets. The ongoing regulatory scrutiny on TikTok in the US could further benefit Meta's short-form video platforms. Threads maturation. Threads has shown impressive user growth, surpassing 350 million monthly active users in Q1 2025. While not a significant revenue driver yet, Meta views Threads as a strategic asset to maintain its dominance in the social media landscape and divert users from competitors like X, formerly Twitter. The platform has started rolling out ads globally, albeit with a focus on user engagement over immediate monetization. WhatsApp and Messenger monetization. Meta is exploring and expanding business messaging capabilities on WhatsApp and Messenger, which are seeing increasing adoption in various regions. Meta verified subscriptions also contribute to other revenue growth. 3. The long-term metaverse bet, Reality Labs. While AI is the immediate focus, Meta remains committed to its metaverse vision. CEO Mark Zuckerberg has described 2025 as a pivotal year for the metaverse, with advancements in VR, AR hardware and software. Meta Quest and Ray-Ban Meta AI glasses. Meta continues to release and iterate on its VR headsets, like the Meta Quest series, and is seeing traction with its Ray-Ban Meta AI glasses. The sales of Meta Quest devices tripled in 2024, and new products with EssilorLuxottica are expected in 2025. Ecosystem development. The company is focused on building out its VR, AR application ecosystem, despite recent challenges with some premium game developers shifting to free-to-play models. Strategic positioning. Meta is strategically pricing its VR hardware aggressively to gain market share, even if it means incurring losses in the short term. The long-term potential of the metaverse, estimated to be a multi-hundred-billion-dollar market by 2030, is what Meta is aiming for, with the goal of capturing a significant portion of it. Challenges and risks. Despite the positive outlook, Meta faces several challenges. Regulatory scrutiny. Meta's large market share and business practices, including its bundling strategy for new apps like Threads, continue to draw antitrust attention, particularly from the U.S. Federal Trade Commission. Potential forced divestitures of Instagram and WhatsApp remain a risk, although considered a low-probability event by most. Advertising market volatility. While resilient, the advertising market is susceptible to macroeconomic shifts and geopolitical tensions. Meta's reliance on Chinese advertisers, contributing significantly to its ad revenue, poses a risk if trade tensions or tariffs escalate. Reality Labs losses. The substantial and ongoing losses from Reality Labs could continue to weigh on Meta's overall profitability and investor sentiment if tangible monetization pathways for the metaverse do not materialize in the medium term. Competition. While Meta dominates social media advertising, it faces intense competition from other platforms, e.g., TikTok, YouTube, Snapchat, for user attention and advertising dollars. In AI, it competes with tech giants like Google and OpenAI. Analyst sentiment and stock projections. Analyst sentiment for Meta stock remains largely positive. The majority of analysts, around 40 out of 50 tracked, rate Meta as a strong buy or buy, with a smaller number recommending hold or sell. The average one-year price target ranges from approximately $696 to $716, with high estimates reaching up to $981. This implies a significant upside from current levels. Analysts are forecasting continued revenue and EPS growth for Meta. For fiscal year 2025, consensus EPS forecasts range around $25.53, increasing to $27.95 for 2026. Annual revenue estimates for 2025 are around $142.85 billion, projected to grow to $145.33 billion in 2026, and even higher in subsequent years as AI investments mature. Conclusion. Meta Platforms is navigating a complex technological and regulatory landscape with a clear strategy focused on AI-driven growth in its core advertising business, while simultaneously pursuing its long-term metaverse vision. The strong performance of its family of apps, coupled with aggressive AI investments and a commitment to shareholder returns through buybacks and dividends, provides a solid foundation for continued stock performance. While the Reality Labs division presents a notable financial drag, its impact is currently offset by the profitability of the core business. Thank you for watching. Please consider liking and subscribing if you enjoy our content. Thank you for joining us, and we will see you in the next video.